Okay, welcome everyone to the deep dive.
Great to be here.
We're going to be digging into, well, a really interesting stack of source material today.
Yeah, it's all pulled from sort of recent headlines, CoinMarketCap community stuff, related articles, all around June 3rd and 4th, 2025.
Right, so very current. And this isn't just, random noise. It feels like a snapshot, doesn't it, of what's moving and shaking in crypto right now.
Exactly. And our mission really is to quickly unpack some of the most striking bits of news from this short period.
And figure out what it all tells us collectively about the crypto landscape right now.
Yeah, think of it as getting the essential insights without getting totally bogged down in every single detail.
It's like looking at different puzzle pieces, right? Scattered on a table, but they're all from the same big picture.
Nicely put.
And, okay, one piece immediately jumps out. The news that Pakistan is establishing what's being called its first state-owned Bitcoin reserve.
Okay, yeah, let's definitely unpack that.
I mean, a national government. Maybe adding Bitcoin to its official holdings. That feels like a massive step, way beyond just, regulating exchanges or looking at a digital rupee. What does that really signal, do you think?
Well, it's potentially a really significant shift. I mean, lots of countries have been focused on CBDCs, right? Central bank digital currencies.
Or tax rules, regulation.
Exactly, tax regulations. But a state directly acquiring and holding Bitcoin as a reserve asset, that suggests they might be seeing it through a totally different lens.
The different lens. Like how?
Maybe as a strategic hedge, a store of value, possibly even, a geopolitical tool in this increasingly digital global economy. It's looking at Bitcoin not just as some volatile thing for individuals, but as a potential state-level treasury asset, kind of like how countries hold gold reserves.
Wow. Okay. So potentially putting it on the national balance sheet.
Yeah.
Right alongside traditional assets.
Yeah.
That's a really different level of engagement.
It certainly is. And it raises some big questions about how nations might, diversify their strategic reserves going forward.
And it's not just countries, right? We also saw news on the corporate side. Companies seem to be getting more serious about crypto on their balance sheets too.
Yeah, absolutely.
Like Adam Back, he's a huge name in Bitcoin, obviously investing, what was it, $2.1 million?
Yeah, $2.1 million into a company called H100 Group, and specifically because they're focused on a Bitcoin treasury strategy.
Right. And what's interesting there is you've got this key Bitcoin figure putting money into a company whose whole model is basically holding Bitcoin as a treasury asset.
And the source mentioned H100 Group's share price jumped significantly after that news. So investors are clearly reacting positively to companies adopting these Bitcoin treasury strategies.
Definitely signals something. And it wasn't just that one case, was it? There was also DigiAsia Corp announcing their own plan.
That's right. A pretty substantial one, too. A $100 million treasury strategy. And this one included both Bitcoin and Ethereum.
Ah, okay. That's a crucial detail. Bringing Ethereum into the mix alongside Bitcoin.
Yeah, it suggests, a level of comfort with diversifying within the crypto space itself.
So they might see different uses, maybe, different value propositions for each one on their balance sheet.
Could be. It suggests companies are moving beyond just thinking about Bitcoin, maybe, to actually implementing multi-asset crypto strategies, which is pretty interesting.
So, okay, from national reserves potentially using Bitcoin like digital gold to corporations actively putting Bitcoin and even Ethereum onto their balance sheets. There's this clear trend, it seems, of increasing institutional adoption.
Definitely feels that way.
Speaking of institutions, how are the big traditional finance players doing in this space?
Well, if we connect this to the bigger picture, you have to look at the success of BlackRock's spot Bitcoin ETF IBIT. It's just been phenomenal.
Right, the spot ETF. So just for anyone less familiar, that's the investment product letting you buy shares that track Bitcoin's price through a normal brokerage account, right? You don't actually hold the Bitcoin yourself.
Exactly. And according to the sources we looked at, IBIT hit a top 25 ranking among all ETFs based on asset accumulation incredibly quickly.
Wow, top 25 overall, not just crypto ETFs.
No, all ETFs. It just shows the sheer speed and scale of capital flowing in from traditional investors.
Yeah, finding its way into Bitcoin through these accessible, regulated ways, it's really bridging that gap, isn't it, between the old financial world and the new one?
It really highlights how much pent-up demand there must have been in traditional finance circles, just waiting for a compliant product like this to become available.
Makes sense. Okay, so shifting gears a bit from those big institutional inflows, let's look at some market activity metrics. The sources mentioned something about pancake swap surpassing Circle in crypto fee rankings.
Right. This kind of gives us a snapshot of where the significant economic activity is happening on different blockchains.
How so?
Well, Tether, the stablecoin USDT, often tops the list for fees generated. That makes sense, right?
Yeah.
All the transfers, the trading pairs involving Tether.
Sure, it's used everywhere.
But PancakeSwap, which is a big decentralized exchange, DOX, where users trade directly using automated protocols, no central company involved.
Right.
For them to climb to second place above Circle, who issues a major stablecoin USDC, it suggests really high levels of trading and related DeFi activity happening on the networks PancakeSwap uses. It's generating substantial network fees.
Ah, okay. So it really shows the dynamic nature of where value is being captured and how quickly that can shift based on what users are actually doing in the decentralized world.
Precisely.
Okay, so let's pivot again from current market activity to maybe a potential future threat. The sources also brought up analysts raising concerns about crypto's readiness for quantum computing.
Yeah, this is a big one. A critical long-term security issue. Analysts and the sources specifically mentioned Rick Mehta are expressing serious concern as of early June 2025 that the whole crypto industry is, well, fundamentally unprepared for the threat quantum computers could pose.
Unprepared how? What's the specific risk?
It's the core cryptography, the stuff that secures Bitcoin and other blockchains, specifically the public key cryptography used for digital signatures when you make a transaction.
Okay.
That could theoretically be broken by powerful enough quantum computers using things like Shor's algorithm.
Right. So while everyone's focused on today's price, adoption trends, regulations, there's this kind of looming technical storm cloud about the basic security of the whole system for a future where quantum computing is real.
Exactly. It's a huge, complex technical hurdle, and it exists on a completely different timescale than, the daily market swings we usually talk about.
Yeah, definitely a different time scale. And speaking of those daily market movements, there was also just a quick mention, wasn't there, about a specific altcoin, Resolve, getting listed on Binance Alpha and futures markets.
Yeah, that's sort of classic micro-level market news, isn't it?
Feels like it.
For any specific project, getting listed on a major exchange like Binance is obviously a significant event. It boosts visibility, liquidity, trading activity for that particular coin.
Right.
It's just a constant feature of the crypto market, new tokens popping up, getting listed. It runs in parallel with all these much bigger macro trends we've been discussing, like institutional adoption and long-term tech risks.
Yeah, it's the individual project hustle kind of happening against the backdrop of these massive structural shifts.
It really underscores the sheer breadth of the crypto space, doesn't it? I mean, everything from potential national policy decisions down to individual token launches and thinking about future-proofing the tech.
Okay, wow. So we've covered quite a bit of ground in this deep dive, just pulling from that snapshot in early June 2025.
Yeah, quite a mix.
We looked at news about a state, Pakistan, potentially setting up a Bitcoin reserve. Major corporations like H100 and DigiAsia adding crypto assets to their balance sheets.
Right, Bitcoin and Ethereum both.
A massive traditional finance player, BlackRock, seeing its Bitcoin ETF explode in popularity.
Yeah, huge success there.
We saw shifts in market activity through things like fee rankings, with PancakeSwap moving up.
Showing that DeFi activity.
And then those serious warnings about future technological threats like quantum computing.
The long-term security question.
And alongside all that, the constant churn of altcoin listings and activity, like with Resolve on Binance.
It's a lot when you lay it all out like that.
It is. And bringing it all together, what's really fascinating is like the contrast, but also the convergence these different headlines show.
How do you mean?
Well, on one hand, you see this increasing engagement from very traditional players, even state-level entities, Pakistan, BlackRock, corporate treasuries. They seem to be pushing towards mainstream adoption, integration into the existing financial and political systems.
Absolutely. That wave feels pretty significant, pretty powerful.
Yeah. But then, at the exact same time, you see the ongoing, really dynamic nature of the altcoin market, driven by project launches, individual trading, and you hear these urgent warnings about fundamental long-term tech challenges like quantum computing that seem, well, still largely unaddressed by the core protocols.
It really does hammer home that crypto isn't just one simple thing, is it?
Not at all.
It's a space being shaped by vastly different forces, different motivations, different timescales, from national strategy down to corporate finance, individual speculation, and these huge scientific security challenges.
Right. Understanding all these varied pieces, even when they seem kind of contradictory, gives you a much more complete picture of what's actually going on.
Precisely. Different players approaching it with different goals and, crucially, on vastly different timescales.
Which kind of leads us to a final thought, maybe, for you, the listener, to consider as we wrap up this deep dive. Given this really complex mix, you've got increasing adoption by traditional and state players on one side.
Yeah, the institutional push.
And then these unaddressed long-term technological risks on the other. How might these very different forces interact, or maybe even conflict, in shaping the future value and maybe the fundamental security of cryptocurrencies?
That's a good question.
What does this blend of news suggest about the different timescales people are really thinking about when it comes to crypto? Are they focused on today's trading fees, tomorrow's corporate earnings report, or are they worried about technological threats that might be decades away?
Yeah. Where's the focus? Short-term gains versus long-term viability and security. Yeah. It's a really interesting tension to think about.